The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 28th, wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance. Today, we're going to go take a look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what it is that they are doing and communicating to you and I, and I'm absolutely grateful for your presence here. Now, I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, that number is 727-445-1044. This is Wonderful Wednesday. Of course, it's the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trade up 89 points ahead of the Fed. She's trading at 17,672. You've got the S&P 500 up 13 points, trading at 2,079. Russell 2000 is up 24 pointeroonies. That is leading the charge to the upside. NASDAQ Composite up 32 points. That's trading at 5,062. The DAX finished up 139. The FTSE finished up 72. Goldilocks on the move today after that full moon yesterday. We may have an initiation move to the upside inside of Goldilocks. That's up $12, trading at 11.78. Silver's up 45 pennies. That's trading at 16.32. Light sweet crude on the move today, up $2.71. That's trading at 45.91. I believe yesterday, or maybe it was in the Tiger's Den that I posted that light sweet crude had come down to its weekly profile low. Looks like that is a pretty good level of support out there. Leading the charge to the upside out here, we got Ultimate Software. It's up $15 and change. That's up 8%. Northrop Grumman up about 6%. That's $10 and change. Jones Lang, that's up 6.5%, up about $10. Belden up 9.28. Anacor Pharmaceuticals up about 9. L3 Communications 8, AutoZone up 8, Banco Marco up $8 out there. And to the downside, you've got Akamai Technologies off nearly 18%, off $13 and change. Index Labs off 11%, that's down $8. Walgreens Boots Alliance off about 8%. A bunch of things moving to the upside and to the downside. Where is my cursor? That could be a real problem if I don't get my cursor out here. Let's go out to Tallahassee and speak to Ben. Ben, thanks for calling. Thanks for holding. How you doing today?
I am doing great, Steve. How are you?
I am doing well. I would be doing better if, if there was an interception thrown in the end zone towards the end of the game last weekend by FSU. Those 3 points were key to that game. Yeah. Another wild ending 2 weeks in a row, folks. If you haven't been catching any of the college football, the week before you had the Michigan State game, won on the last play of the game in a fluke kind of a play. And then we had another one with FSU. And who was FSU playing? I can't remember. In any event, so that means stay tuned this week and watch college football. That's all I can say.
Yeah, there you go. I did watch that Michigan game, though. That was pretty amazing.
It was. So are you in the USO? Tell me what you're doing, how I can assist you.
Well, here's my take. I've been hearing from various people that the oil looks like it's heading south. CNBC and a few others, and I'm looking at it from a technical standpoint, using kind of like you do, different techniques. So from a volume standpoint and from a wave standpoint, if this thing closes above 1428, and I'm looking at the date of 8/31 on a daily.
Okay, so let me just do this here. Give me one moment. I want
Yeah.
to see if I can. Okay, I'll go first to USO. So let me do that
Yeah.
because
Yeah.
then we're gonna come back to the contract itself.
Sure.
Just so we can use that as a guide. Okay,
Right.
so now are you
So if
in a
you-
position or not at this
Well,
stage?
I was ready to pull the trigger on a long, but of course I probably
Okay.
should turn the crazy radio off is what I should do. And if you put it on a 3-month or 6-month daily,
Yes. Okay.
today actually it low is 1391. Well, actually yesterday it even went lower. Bottom line is if this thing dipped underneath and it closes above the low of 831, which is 1428, that volume on 831 is 87 million.
Absolutely.
To me, if this thing closes above that, that looks like a complete rejection of the low. And then on top of it, we've only made a peak C in the Chapman wave. This thing looks like it has a lot of potential here to go above the October 9th high.
Well,
Crazy?
let's go with. So let's take a look at a couple of additional things that you can factor into to your decision making. And folks, what we're taking a look at is the ETF for oil. USO is one of the ETFs that you can play out there. And what we're going to do is, I was just trying to, maybe if I just switch over to another page, this might be easier. It'll take me just a moment, but what it will allow me to do, I believe, is to set up two different charts. I don't know why my system is acting a bit slow out here. It typically does that just as I'm about to start the show. I hate that. We don't want to do that. We want to tile this thing vertically. There we go. Okay, so we're going to try to set this up here so that we can take a look at side-by-side USO. We're going to take a look at the daily charts out here. So we're going to take a look at USO, and that's going to be on the left-hand side. And then I'm going to take a look at the current contract. So in my case, I've got CLZ5. I think if I go equals 1, that will get that. There we go. Now we're going to take a look at the daily. Now what I want to do here, Ben, and it's going to take me a second, we're about 10 seconds away from going through to the breakout here. So can you hang on through the break?
Yeah, absolutely.
Okay, so I'm going to go ahead and get these charts set up out here, and that way we can have on one side the oil contract, and that way as you and I take a look at what it's doing, it'll differ a bit from taking a look at the ETF structure out there, and it will help us to better navigate, in my opinion, different levels that we should be looking at. So we'll be back with Ben. We'll take a look at Lightspeed Crew. We'll take a look at the USO and anything else you'd like. You too can get in on the action. 877-927-6648. Steve Rhodes with TFNN. We'll be right back. No break. Oh, son of a gun. How about that? I'm on the wrong clock out here. Hello.
Yeah, I'm still here.
yeah, I know. You are, but apparently I'm not out there. Okay, so sorry about that out there. Boy, I confused our guys in the trailer that are working out there. How about that? Yeah, I had the wrong clock up. Okay, so now give me a second here, Ben. Sorry about that. Let me go ahead and add in. What I'm gonna add in here are the market profiles. So this will take just a moment to do. Shoot, it was going to be so much easier if we were really going into the breakout there, because then I didn't have to have people just wait here. You have to wait, but that's too bad. That's what we got to do now. All right, so we've got that added. That should populate here. Come on, work with us. There we go. Okay, let me switch over to the oil contract. And what we're going to specifically do, because what I want to show you side by side here is that yesterday we saw the oil contract get down to its weekly market profile out here, and we did not see that take place inside of the USO. And so and that's why it's so important to take a look at the underlying instrument out here. And as I take a look at these market profiles, I want to come back and I want to turn a couple of them off so that you and I are just really taking a look at the daily and the weekly out here. And this gave a great signal yesterday, at least with regard to if somebody was looking to go ahead and play this out here. It gave a good signal with your back being up against the wall. So now as I switch over, just let me get the USO chart all set up here. And if you're watching this on Tiger TV, look at the right-hand side of my chart out here. And the dash line, the green lines out here represent the weekly market profiles. Let me set this up here.
Yeah, unfortunately, I can't see it, but I certainly can understand when you talk through it.
Okay, so let me tell you what it is that we're looking at. Yesterday, as price was moving down, what it did was it hit the level of, it actually got down to a low of 42.58, closed out the session at 43.20, and 42.76 was the weekly profile low, which should be a good level of support here. And if we were to take a look at the same chart and look for the weekly profile on USO, that actually would be priced out at 12.97. So the two really don't jive or don't really connect with each other. Now, what price is about to do here, when I take a look at light sweet crude, today it should be able to get up to 46.30. It's not that far away from there. You're at 45.86 right now. And at 46.30, that's going to be on its weekly basis, its point of control. And at the point of control, it's the area where price is most comfortable. And so that may be all that's inside this move today. I don't know. I don't know if any of this has to do with anticipation of whatever the Fed might say. You know, what we do know is that price came back to a real good level of support yesterday. It held. It's bounced off of that. And in taking a look at either USO or the oil contract out here, basically until light sweet crude closes above 50.72, that's the number to be looking at, then all that we really have is a nice sideways trading range out here. And as we take a look, if I go back and take a look at USO, I could give you what those market profile numbers are. The problem is, and I will give those to you, it's 1620 would be its number. The problem is, just like yesterday, where price didn't get down to its weekly because the underlying instrument is really the contract on my right-hand side of the screen out here, I think that the numbers are somewhat irrelevant to take a look at what they are inside of that ETF out there. So then that means...
You're saying the USO ETF, you're saying, isn't something that you really trust well, or...
I wouldn't trust the market pro. I wouldn't play the. I wouldn't rely upon my trading decisions on the market profiles as I would inside the actual contract. And the perfect example is yesterday, because if I were going to say, hey, I know that when I take a look at these market profiles inside USO, this says that as of yesterday's action, price really should have come back to 12.97. But no, because what was really controlling the direction and price levels of the USO was what's going on inside the current contract for light sweet crude. And that came back and tested the level of support yesterday, and then it's bounced off of that. This also says, look, if light sweet crude gets above 46.30, USO probably does go test that swing point that you identified from August 31st.
So I guess just to clarify, if it does close above that August...
Now I'm going to ask you to hold on and then come back with all the questions that you want, and we'll figure this out. All right, my friend? That's Ben in Tallahassee. This time we are going to break, and we'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of the Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up about 91. We're going back out to Tallahassee. We're speaking with Ben. We're taking a look at USO, which is the ETF, one of the ETFs you can use for trading crude. And we're actually taking a look at the crude oil contract. Okay, so, during that break there, I got all befuddled because I thought we were going to a timeout, and we didn't. So I was putting timeout there. But anyways, I'm all set now, so fire away with your questions, Ben Aruni.
Yeah, so if you look at just volume, and I know one metric isn't a good tool, but when you got a volume differential of this magnitude, it sure looks like it would be a good metric. So I'm looking at the August 31st,
Yes.
right, 87 million on the USO, and if this thing closes above it today, you don't think that's an extreme rejection of price, or what are your thoughts on that?
Closes above what? Closes when you say closes above August 31st?
Closes above the August 31st low.
So in that case, what would be happening? Now, the August 31st low, folks, is 1428, and USO is trading at 1464. Volume today is 33 million versus what Ben is benchmarking is 87 million. We know that that's going to come in light, but if it closes, even when you come into a swing point, and the actual swing point really for benchmarking is actually going to be October 9th. Not August 31st. But nonetheless, if we use that as the swing point and use that as the example, when you close inside a swing point, even with light volume, says you can easily go up to test the top. Is that what you're...
Yeah, that's where I was thinking, if it rejects that and it goes to the top of that is 1615, and then...
Well, a rejection for me would be that it closes below 1428 today. because then you would be rejecting, kind of a high. If it were the swing point, you would be rejecting a swing point on lighter volume. And then that says, okay, this was nothing more than a counter trend bounce, and it would be ready to move lower out there.
Oh, I thought a rejection is when it goes underneath it on lighter volume and then closes above it.
So you've got two different areas in a swing point that you can have rejection. You can have rejection at the top of the swing point. So as price is moving, let's take as the example as price is moving up. If in this case we'll use August 31st and we'll just assume that's a swing point. So if and when it were to move above 1615, close back below 1615, do it on light volume, that would be a rejection of a swing point on price and volume. You can also, on a move up, you can reject the bottom of the swing point.
Right.
Case in point would be the NDX 100 today. That's something that we really ought to, just as long as we're on the phone, we ought to go take a look at it. Because in the case of the NDX 100, we're going to see that it has tested its swing point high. So the swing point inside of NDX, let me get rid of a couple things on this chart out here. We don't need those retracements. Let's go ahead and get rid of the A to B equals CD so that we're looking at a chart here very clearly. The swing point inside the NDX 100 is July 20th. The bottom of that swing is 46.5798. Now, today we have seen so far an intraday high of 46.5867. We're trading below that. We're right now trading at 46.53. If this were the close of the session and that was a test on light volume, we would have a rejection of a swing point on both price and volume. That doesn't, and if you're coming in lighter, there's no other work that would need to be done to the upside. You would have what Tom, in his book, The Art of Timing the Trade, would classify as a rejection, as an absolute rejection on price and volume, a failure out there. Likewise, let's say the NDX 100, we're using this as our benchmark right now, were to close above 46.5798, even if it's on light volume. When you close inside a swing point, it says you can then go test the high even if it's on light volume, which would be 46.94. The other rule would be if you are moving into a swing point with volume, even if you reject it and you close below it, because you were moving into it, it says you still got energy that you want to expend, and it will go test it again. Doesn't necessarily mean it will test the high, but says it will test that swing point again. So those would be the kind of the rules. Now, does that make sense, or did I confuse the heck out of you?
No, I think I'm still accurate in saying that since today it went underneath the August 31st, and now it's above it. If it closes anywhere above 1428, I think that's still a rejection of the low of that, and it should go to the high as long as it's on lighter volume.
Well, so when I use the word rejection, to me that means it needs to close below that level. So a rejection, an actual rejection of price says I tested either the top or the bottom. In this case here, the bottom. And then you close below it, then you would be rejecting it.
Interesting. I guess I never knew that. I thought that you had to go under it and then close above it on lighter volume. So,
yeah, that's not a rejection. That would be just really closing inside a swing point.
All right. Sounds good. Thanks,
okay,
Steve.
Ben. Hey, thanks for calling.
Thanks.
Have a great day. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now, we got the Dow trading up about 91 points, 93 points. The S&P's up 13, Composites up 35. And during those last two segments, we were talking about, some really important things, swing points, how when those swing points are hit with volume, whether with light volume or with strong, heavy volume, whether it tests the bottom or the top, what a rejection is, at least when I'm speaking. I believe it's also the way that Tom is speaking as well, rejection of either the top or the bottom. And we also were taking a look at the NDX 100. Now, the reason that we're taking a look at the NDX 100 is because it has tested at least the bottom of its swing point out there. So I want to go back and take a look at this. This time, though, what we'll do is we'll use the cues. Now, not always when the index tests its swing point will the ETF also be tested, because the ETF is dealing with dividends, fees, things of that sort. But we are fortunate today because the Qs have also tested their swing point. So we have a little bit of synergy. That means that you and I can take a look at volume. Now, look, at 2 p.m., as David White's show, David's show begins at about 2:06, 2:07, we'll have I believe we'll have the release of the Federal Reserve minutes. And the market's going to respond one of three ways. It's either going to go ahead and respond by doing nothing, by moving higher, or by moving lower. If you look at the markets right now, you'd say, hey, it's got to move higher. They're already celebrating out there. They're dancing in the streets. Apparently, people know something right now that they didn't know yesterday and the day before. But let's take a look at what it is that we do know. and what it will mean depending on the closeout here. So the swing point that you and I want to take a look at, and the swing point would be July 20th. That's its all-time high. The high inside the Qs is 114.39. The low is 113.48. The volume is 26 million. Now, for the first 4 hours of trading, the Qs have done 14.5 million shares. If you take 14.5 million shares, you divide it by 4, multiply it times 6.5, just simple straight line math, that says we do about 23 million shares today. So that would be 23 going against 26 and a half out here. Maybe it's 24 going against 26 and a half. And volume could pick up. I don't know. It's going to do one of three things, right? But here's the deal. Let's just assume, we'll go through 2 or 3 assumptions out here. The first assumption is that price inside the QQQ closes below 113.48 today and does it on less than 26.5 million shares. You would have a rejection on price and volume because it tested the swing point, closed back below. It tested the bottom, so it closed back below. So that's one scenario. What does that mean? That says typically you can't bust them up. You try to go bust them down. What does bust them down mean? Well, bust them down, as I take a look at the chart, would say go to the prior swing point. That would be September 29th. That would be the level that one could target. There's other levels of support, but let's just take a look at just the normal, natural, what your eyes should first gravitate towards. Scenario number 2, price closes above 113.48, still does it with less than 26 million shares. If you close inside a swing point, in this case here by inside, price is moving up, it'd be above 113.48. That says then you can go test the high. You don't have to, but when you close inside a swing point, it's kind of like, I might as well go. Check it out and see what it's like up there. It just, so if you close inside a swing point on light volume, you have no failure whatsoever. The best way to read it, the most conservative way to read it, is I want to go test the high. That's scenario number 2. Scenario number 3, we'll give you 4 scenarios at least, right? Scenario number 3, you close inside above 113.48, but you don't tag 114.39, it's high, and you do it with more than 26 million shares. That message would be, I'm going to go test that high. That's how you would look at it. Now, what I'm communicating to you is I will tell you this works better with individual stocks than it does with the ETFs out here. But that's a whole nother story. Let's go with scenario number 4. You get a close above 114.39. You do with more than 26 million shares out there. That says you're going to higher ground. Now, what would that higher ground be? We can take a look at A to B equals CD patterns. We can take a look at expansions of swing points. There's all different types of, if it was a consolidation, we take a look at what that consolidation was to come up with a measured move. All different types of way that we can measure price. Scenario number 5, let me see if I've got this one. You test 114.39, and you close back underneath 114.39. You do that with less than 26 million shares. That would be a complete failure on price and volume. Actually, that would be a failure on price and volume. The complete failure, the ultimate complete failure of testing a swing point is you go above the high, you close back below the low, you do it all on lighter volume, then you've got the complete failure. So there's the 5 or 6 different scenarios that you would go through to help you identify where price is likely headed to. So what does all that mean? That means inside of the Qs, we probably get a ton of information now. With regard to the Qs, what do we know ahead of time? Let's start with the 30-minute chart out here inside of the NQ as we take a look at it. What is interesting with regard to the futures market is yesterday, after the release of Apple's numbers, we saw the NQ power on higher, up to a price level. It got up to a high of 46.5175. Interestingly enough, that level has not been taken out. Now, as price got up to that area, that represented the 6th wave coming from 2 different swing points out here. So I'm pretty comfortable that yesterday's move higher inside the Qs on the 30-minute chart got to a 6th wave. That says that wave number 7 is likely to take place no matter what the release of, no matter what comes out of the Fed minutes out here. We're likely to see at least a move higher above that level. And then it could be, that could be it. It could be a 7th wave. Price could move lower. We'd see a retracement, whatever that might be. Likewise, could also just simply take it out and continue running higher. But on the 30-minute chart out here, that says, okay, we don't have any real confirmation on the NQs out here of some type of substantial breakout. If I look at the 2-hour chart here, 2-hour chart, we're just looking for signals. The 2-hour chart, this is coming from a different swing point. In this case here, it's this little hammer candle. That's where we began our counts down here at about the close on October 21st. So quite a while ago. And if we take a look at that, guess what? Yesterday on the 2-hour chart, we also got at that same session a sixth wave out here. And in the case of the 2-hour chart, price had been moving higher with less relative weakness out here. That still may be the case even if we see a little bit of a spike there. If we see a spike there, that lasts as the seventh wave. Now remember, at this candle session closes at 2 p.m. So you wouldn't really have that until after the 4 o'clock, between 4 when the contract actually closes to give you any kind of a signal out there. But we do know inside the NQ on a 2-hour chart, price has been moving higher with less relative strength out there. If I just go switch, these are 3 of the primary intraday timeframes that I look at. They're not the only ones, but on a 5-hour chart out here, we can also see price has been moving higher, doing it with less relative strength out there. So that oftentimes can be a sign of, that's when prices are moving higher. Just like when you move into a swing point, you want to do it with volume. You want to move in with energy, whether you're using the power law Victor indicator, whether you're using price relative strength analysis, whether you're using volume moving into a swing point. There's a number of different ways to measure energy inside of a market out here. If we take a look at what really has been moving higher, which is the Russell 2000, inside of the Russell, we can see that it's already made its 7th wave move on a 30-minute basis. Now, I don't know if the party is over inside the Russell 2000, if they got ahead of themselves or not, if they were just simply building up steam, because as you and I looked at yesterday, the Russell 2000 has been underperforming the Russell 1000 for a long time. And so now that's not the case today. Most certainly with the move that we've seen inside the Russell 2000, that pattern that you and I looked at yesterday, that's kind of gone out the wayside. But that's really an end-of-day pattern. So it all matters on how things shape up come the 3:59 4 o'clock time frame. On the 2-hour chart out here inside the Russell 2000, what is it doing? Really not much. Consolidation. That's what, when we take a look at it, that's what it is doing. So that's got a consolidation pattern. That's not showing us a whole lot out here. I don't think in the 5-hour chart, we're going to see the same type of thing out here. So there's nothing there to really focus on. And inside the daily time frame, as I take a look at it, let me see if there's really anything out here. Not really. Just sideways consolidation inside the Russell ever since about the October 7th time frame out here. So it's only the 30-minute chart inside the Russell 2000 futures contract that's providing us with any information. But let's go take a look at the IWM. Right? We looked at the NDX 100. We took a look at the Qs. Let's go take a look at the IWM. Let's go see what kind of information we can get here. Now, inside the IWM, and from a volume perspective, we have done 33.4 million shares. So 33.4 is going to give us volume today of approximately 50 to 54 million shares. Now, we have a swing point that we can use to do some analysis. That happens to be September 17th, the bottom of which is 116.68. The IWM has not hit that yet. It's gotten up to a high of 116.59. So it's off by, 9 pennies out there. But what we do know is the volume on September 17th was 50 million shares. And today, the projection would be that it's going to do about 54 million shares. If the IWM closes inside that swing point, anything above 116.68 today, and if it can do it with with more than 50 million shares, that almost assures us that the IWM wants to go test that high of 118.89 out there. Likewise, maybe the volume over the course of the next couple of hours doesn't really straight line it out like we've just taken a look at. And instead, you get a test of 116.68, you close back below 116.68, you do it less than 50 million shares, then you have a failure inside the IWM of its swing point, its most recent swing point. If you can't bust them up, what it will try to do is go bust them down. Now, bust them down inside the IWM would mean one of 2 places out here. One of 2 logical places. I could come up with 2 additional places. But those 2 places that you would first look would be the September 29th swing point out there. That would be place number 1. The second place I would be looking at is this gap that occurred on October 5th. And that's priced out at about 111.54. So we have our parameters, in essence, that are set up. The IWM has been moving higher with volume, whereas the Qs have not. So that's interesting. That says, something to think about. If we go take a look at what's going on inside of the S&P 500, let's go do that, see if we can. Now, in the case of the S&P 500, it's really trading just at about the 0.786 retracement level, 2,075. It's just a tad higher than it was on October 23rd. There's not a whole lot more that we can garner out here. There's not a whole lot more that I can garner out here. I would say that, it's more bullish than it is bearish if I look at the S&P 500 index chart out here. There's no A to B equals CD pattern worth noting. It's nowhere near the 2132 or 2134 area, the real all-time swing point high out here. So, there's not a whole lot that I'd say is worthwhile to glean from the S&P 500 chart. Now, maybe a different case inside of the ES Mini. So let's just go take a look at the ES Mini, look at the 30-minute chart out here. No price relative strength divergent pattern. It is in wave 4. You can, between waves 4 and 7, to get some reversals out here. So that doesn't look too bad. If we look at the 2-hour chart, we're just looking for some clues, right? If we take a look at the 2-hour chart, this doesn't provide you and I with a ton of information that I can see anything of significance. Certainly nothing bearish as we take a look at it. And all that can change, how fast? Yep, in a click of a finger, in a heartbeat out here. Now here on the 5-hour chart, there is a piece of information out here. And that piece of information is during this last 5-hour time period, we actually saw a little bit higher high than took place out here on the trading session. This was yesterday's close, I believe. Let me see. This was October 23rd. No, it was October 23rd's high, which was a 7th wave to the upside. So on the 5-hour chart, it's saying, hey, you know what? If I can close above this 2,075 mark out here, I'm going to go run higher. And that's really its message out there. So the Qs, the NQ, and, different message than the ES Mini out here. Which one is going to tell us the eventual message? I don't know. I really don't know. If we look at the summation index, price oscillators for the New York Stock Exchange, NASDAQ Composite, Dow, what we're going to see is continued declining tops. Now we see one other pattern out here, and that's this. In the NASDAQ Composite yesterday at the close, we saw price dip below the zero line out there. Typically, that says that it is the sellers that have control. Well, if they have control, they intercepted the ball, and then they fumbled it on the very next play. Now, that may not be the case because this doesn't mean a hill of beans until we get to 4 o'clock. So the message here at 1:48 p.m. could be a whole lot different than what the message is at 4 p.m. Likewise, we can see that it's got a declining tops. Right? Declining tops price oscillator. So it's like we can figure out both bullish and bearish what to be looking for. So we've got a declining tops price oscillator out here. And if that declining tops price oscillator can be taken out, meaning a move above it, then that says that prices are going to run higher. Inside the NASDAQ Composite, that says that it probably tries to make a run for its highs back here on July 20th, which is quite a ways away from where you're at right now. That low is 5201. You're at 5,071 out here. So that's inside the Composite. Still a declining tops price oscillator out there. That's not exactly a bullish. It's not a bullish sign. Same thing inside the New York Stock Exchange out here. It, too, dipped slightly below zero. It's back above it as of 1:49 p.m. I don't know where it's going to end up when we take a look at the 4 p.m. time frame, but if, in fact, it can take out its rising or its descending price oscillator, that would be bullish. Likewise, if it closes back below zero, it really wasn't a fumble. Somebody took a timeout. That's all that took place today, would be a timeout. And that's really all that I could say. Inside the Dow, it too has a declining tops price oscillator while price has been moving higher. That's not a bullish pattern, but that can resolve itself, and maybe that's what it's going to do. The VIX index right now, if we take a look at it, it's off by about 5%. It's down 82 cents. It's trading at 1461. That's actually good news for the bulls. This is Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new Market Safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So just about 6 minutes till we find out what the Fed is doing out here. You know, a while ago, a long time ago, when there was this issue with regard to the increase in the Fed funds rate and what it actually means to the marketplace out here. You know, I'd gone through this in the past. I'm going to go ahead and do it for you right now. Had some dialogue going on earlier before, just sharing a look at charts. Now, this is all from a technical perspective. It has nothing to do with my opinions or anything along those lines. And, you know, it's not over-analyzing the data. But if we take a look at this chart here that I'm going to post up on my screen, the brown line that is on the screen out here is the Fed's funds rate. Now, and this snapshot of the of this, I'm going back to 1987. So we got 87 in essence through through the end of August out here. Maybe I've got it out through the end of August. And so the brown line is the Fed's fund rate. If it's moving down, you've got the Fed's fund rate moving lower. When it starts to move back up, just as it did back here in the 1993 timeframe, what we saw the market do, because the blue line is the Dow. So as the Fed's fund rate was increasing, what was happening to the Dow? Yes, it too was moving higher. If you take a look at back here in the 2004 timeframe, as the Fed's fund rate was moving higher, what was the Dow also doing? Moving higher, yes. With regard to the exceptions of what might happen, this is a monthly chart that we're looking at, so this is not looking at the day-to-day. You and I have looked at the day-to-day, and there typically is a knee-jerk reaction and a pullback out here. And so everybody believes that a Fed's funds rate that moves higher spells curtains for the market out here. I don't know what in the heck it is that they're looking at, because that's not the way that it's worked in the past, looking at the longer-term perspective out here. And that's just the way that it shows up on the charts. I could go back further, but I really don't need to. You're going to see the same type of thing out here. Now, this is the chart that I shared with someone earlier. That's an interesting chart in my opinion, because what we were discussing was the fact that on September 29th, after the Jobs Friday data, where we saw the market move lower and then higher, because the jobs data was bad, that was why the market was moving higher. And when I take a look at that, there's a number of different ways you can look at the jobs data. One way, and that's what this way here represents on my chart, the blue line happens to be non-farm job openings. As more jobs are opening up, the line is moving higher. When jobs are moving down, that's moving lower. And this has a better correlation directionally to what the Dow does. If you take a look at the bottom portion of the chart out here, you can see that this is a whole lot better correlation as to what's going on versus interest rates. So what's the premise out here? The premise is if the job openings, the job market really starts to tighten up, and this here just goes back to 2005. So I pick up because that's all that that's the Bureau of Labor Statistics. I only have the data going back to 2005. If I had it going back further than that, then I would provide that to you. But this one correlates much better. So, bad, you get to the cycles here as bad, good, or as good, bad. I can tell you that if jobs start really tightening up, it's certainly a sign of what's going on inside the economy out here. And that, to me, is a better indication of what we might be looking at versus if rates go higher. And that's why, if ever there was a time to raise rates, really, would it be today, for goodness sakes? I mean, really, we're back up at the highs when we just took a look at the NDX 100 and pretty much everything else too out there. So hopefully they get their shtick together and make the right decision. This is Rhodes with TFNN. Stay tuned. Our man David White is up next. Because it is Wonderful Wednesday, we got Tom O'Brien from 3 to 5. Have a great day, folks. Look forward to seeing you on terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.